stop what you're doing, because this morning, Saturday, February 28th, 2026, the world just changed. And if you hold silver, if you're watching the precious metals market, if you care at all about where your money is going Monday morning, you need to hear every single word of this video. Here's the headline that dropped while most of America was still asleep. The United States and Israel have launched a massive coordinated military strike on Iran. Not a warning, not a drone skirmish, not a proxy conflict somewhere nobody's watching. A full-scale military operation hitting the Iranian capital Tehran, the cities of Qom, Isfahan, Kermanshah, and Karaj, simultaneously, all at once. Before dawn, President Donald Trump confirmed it himself, calling it major combat operations inside Iran, the largest American military action in the Middle East since the 2003 invasion of Iraq. This is not a drill. This is not routine geopolitical noise that markets shrug off by Tuesday. CNBC's own analysts are calling it, quote, bigger ramifications than Venezuela. Reuters is warning that a prolonged conflict could push oil to $100 a barrel and add nearly a full percentage point to global inflation. The Strait of Hormuz, the narrow waterway that handles 20% of all the world's oil supply, is now effectively sitting in a war zone. And right now, as financial markets around the globe brace for Monday's open, silver is up nearly 8% on the day. COMEX silver settled at $93.82 per ounce, up 6.83 on Friday alone. So today, in this video, we are going to break down everything. What happened, what it means for oil, what it means for the US economy, and most importantly, what this Iran crisis means for silver, and why some of the smartest money on Wall Street is saying this could be the most explosive catalyst silver has ever seen. Stay with me. Let me walk you through exactly what happened, and why this is categorically different from anything we've seen in the last decade of Middle East tensions. At dawn on Saturday, February 28, 2026, the United States military, alongside Israeli forces, launched coordinated airstrikes across the Islamic Republic of Iran. The targets weren't just nuclear facilities. According to Reuters and multiple intelligence officials, strikes hit Tehran, several ministries in the southern part of the Iranian capital. 7 missiles reportedly struck the district housing Supreme Leader Khamenei's residence. Qom, one of Iran's most significant religious and political centers. Isfahan, home to major Iranian military-industrial infrastructure. Kermanshah, a key western Iranian city with military installations. Karaj, a major industrial hub northwest of Tehran. This is not a surgical strike on a single nuclear facility. This is a coordinated multi-city campaign hitting leadership, intelligence, military infrastructure, and industrial capacity, all at the same time. President Trump went on the record announcing major combat operations and urging the Iranian people to, and I'm quoting here, take over your government. Israel's defense minister Israel Katz called it a preemptive attack targeting the Iranian regime itself. This is regime change language, and markets understand exactly what that means. Iran did not absorb this quietly. Within hours, Iran's Revolutionary Guard Corps, the IRGC, retaliated, firing missiles at 4 U.S. military bases simultaneously. Al Udeid Air Base in Qatar, Al Dhafra Air Base in the UAE, Al Salem Air Base in Kuwait, and the U.S. Navy's 5th Fleet headquarters in Bahrain. The UAE intercepted incoming ballistic missiles, and debris killed 1 person in Abu Dhabi. Let that sink in. This is the first time in history that Iranian missiles have struck Gulf Arab capitals simultaneously in a single engagement. Some of the world's largest oil trading houses have already suspended crude oil and fuel shipments via the Strait of Hormuz as of this morning. 4 major trading sources confirmed this to Reuters. The global energy supply chain is already being disrupted, and it's Saturday. Markets haven't even opened yet. Now, for those who don't track global oil markets day to day, let me explain why the Strait of Hormuz is the single most important geographic location on Earth when it comes to energy prices and ultimately your wallet. The Strait of Hormuz is a narrow waterway, only about 21 miles wide at its narrowest point. Located between the tip of Oman and the southern coast of Iran, it separates the Persian Gulf from the open ocean. According to market intelligence firm Koppler, approximately 13 million barrels of crude oil per day transited the Strait of Hormuz in 2025. That accounts for roughly 31% of all global seaborne crude oil flows. When you include natural gas and refined petroleum products, you're talking about 20% of all global petroleum liquids, roughly 20 million barrels per day, passing through this narrow strip of water every single day. All of Qatar's liquefied natural gas exports, all of the UAE's seaborne crude, the majority of Kuwait's and Iraq's exports, they all go through the Strait of Hormuz. Kenneth Goh, Director of Private Wealth Management at UOB Kay Hian in Singapore, put it brilliantly. Venezuela was a production story. Iran is a choke point story. Even a partial disruption, a 20 to 30% flow reduction, would send crude oil above $100 a barrel. A full closure would send global energy markets into uncharted territory. Brent crude closed Friday at approximately $73 a barrel, already up roughly 20% this year. Now let's get to the core reason you clicked on this video: silver. As of Saturday, February 28, 2026, COMEX silver settled at $93.82 per ounce, up 6.83 on the day, representing nearly an 8% single-session surge. Silver opened the year 2026 near $70 per ounce. On January 26, 2026, just 5 weeks ago, silver hit an all-time record high of $116.67 per ounce. Silver averaged roughly $30 per ounce back in early 2024. We're talking about a more than 200% rally in roughly 2 years. Reuters wrote this morning. Investors could also make another dash for gold, which has had a record run and is up 22% so far in 2026, and into silver, which has also been on a roll. Gold and silver, mentioned together, in the same Reuters article about war safe havens. Gold rose roughly 0.73% to $5,251 per ounce. Silver surged nearly 8% in the same session. Silver is not just a safe haven, it's a hybrid asset, precious metal and industrial metal. Even before a single missile was fired at Tehran, silver was sitting on top of one of the most explosive supply-demand setups in its entire market history. According to the Silver Institute, 2026 will be the 6th consecutive year of structural market deficit for silver. The projected deficit for 2026 alone is approximately 67 million ounces. Industrial demand for silver is forecast at approximately 650 million ounces in 2026. Solar energy alone is expected to consume 120 to 125 million ounces of silver. Electric vehicle production is forecast to reach 14 to 15 million units in 2026, adding an estimated 70 to 75 million ounces of silver demand. Meanwhile, total supply is forecast to reach approximately 1.05 billion ounces, still falling short of demand. In February alone, a minor delivery month, 50 million ounces left COMEX vaults. Bank of America says silver could reach between $135 and $309 per ounce before the end of 2026. JP Morgan sees silver averaging $81 per ounce in 2026, but notes that escalation in the Strait of Hormuz would require recalibration significantly higher. BNP Paribas sees silver at $100 per ounce by end of 2026. Citi analysts remain constructive, citing structural deficits and safe haven demand. In a single day earlier this year, $3.4 billion flowed into the iShares Silver Trust, SLV. Retail investors net bought approximately 171 million of SLV on a single Monday. The iShares Silver Trust currently has a NAV of approximately $81.51 per share, with a 52-week range from $27.46 to $107.35. Now let's talk scenarios. Scenario A, managed escalation. Oil trades in the $80 to $90 range. Gold pushes above $5,400 per ounce. Silver tests the $100 to $110 range again. Scenario B, escalation spiral. Oil spikes above $100 per barrel. Gold potentially surges past $6,000 per ounce. Silver could push back toward and beyond the all-time high of $116.67. Scenario C, regime fracture. Uncontrolled volatility in oil markets. Precious metals, particularly silver, could see price discovery at levels that seem unimaginable today. There is also a downside risk. A genuine peace deal could trigger a peace crash in silver, potentially driving prices back to the $65 to $68 range. If oil spikes from $73 to even $85 or $90 per barrel, analysts project a 25 to 30 cent increase in U.S. gas prices within weeks. Capital Economics estimates a prolonged conflict could add 0.6 to 0.7 percentage points to global inflation. The VIX Volatility Index has risen by a third this year. Bitcoin fell 2% on Saturday and is down more than a quarter of its value in 2 months. Silver is simultaneously a war safe haven and an industrial metal powering solar, EVs, AI infrastructure, and defense manufacturing. The 67 million ounce structural deficit does not disappear in any scenario. On February 27, 2026, first notice day for the March silver contract, February had already seen 50 million ounces leave COMEX vaults. March is historically 3 to 5 times larger than February for deliveries. Silver surged from roughly $30 in early 2024 to $116.67 in January 2026, the strongest nominal rally in recorded history. Expect a volatile Monday open in U.S. stocks. Energy stocks could rise. Defense stocks could benefit. U.S. Treasury yields are expected to fall. The U.S. dollar could strengthen in the short term. Saudi Arabia's and Qatar's markets will be the first signals when they open Sunday. We are living through a historic moment. Silver is sitting at $93.82 in a market facing its 6th consecutive annual structural deficit. Bank of America says $309 is possible. COMEX vaults are draining. SLV absorbed $3.4 billion in a single day earlier this month. No one knows exactly how this plays out, But silver is at the intersection of geopolitical instability, the clean energy revolution, and the search for real assets. Do your research, make your own decisions, talk to a qualified financial advisor, keep your eyes on the Strait of Hormuz, because what happens there in the next 72 hours will set the tone for global markets for months to come. If you found this video valuable, hit that like button, subscribe if you haven't already, drop a comment below. What do you think happens to silver by end of Q1 2026? Share this video with someone who needs to understand what's happening. I'll see you in the next video. Stay safe, stay informed, and always, do your own research. Disclaimer. This video was produced for educational and informational purposes only. Nothing in this video constitutes financial, investment, tax, or legal advice. All data and analyst quotes cited are sourced from publicly available news organizations including Reuters, CNBC, Forbes, Bloomberg, the Silver Institute, JP Morgan Global Research, Bank of America, Natixis, Capital Economics, and other financial media outlets, as of February 28, 2026. Silver, gold, oil, equities, ETFs, and all other financial assets discussed carry substantial risk of loss. Prices can and do move violently in both directions. Past performance does not guarantee future results. Analyst price targets are forward-looking estimates, subject to revision, and are not guarantees of actual market performance. The hosts in this channel are not registered investment advisors, securities brokers, or financial planners. This content does not represent a solicitation or recommendation to buy, sell, or hold any financial asset. Always consult a licensed and qualified financial professional before making investment decisions. Never invest money you cannot afford to lose. Viewers are fully responsible for their own financial decisions.